Good evening, everybody, and welcome to the first edition of Live Market Analysis for 2026. My name is Carl Cavalingo. If you don't know who I am, I know many of the people in session do, but these do get put up to YouTube after the fact, and people do discover them for the first time. I'm, I don't know, somebody who likes to invest, likes to trade, perhaps is another name for it, and I've learned a few things along the way through trial and error. Many painful errors, and sometimes successful trials. And I've learnt through much of that heartache to keep doing the things that worked and to do less of the things that didn't. And if you've been listening to me for any length of time, you're starting to realise the importance of that very simple fact. Of course, this is live market analysis, not to be confused with ChartWatch Live, which is where my alter ego, the other Carl, puts webinars out on Wednesday for Market Index and Lifeline Markets. This is what I call offline. It's for a community that existed with a previous employment that I like to keep going, my quote-unquote Monday night crew. And we're glad to see them back in 2026. Regardless of who's listening tonight, we need to understand that the content of this presentation is general in nature, has not taken into account your personal financial objectives, circumstances or particular needs. So before acting upon any of this very general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of that information is very important. Stuff like you're responsible for the stuff you do, not me. And markets go up and go down, and they might not go the way you'd hoped. So be careful on how you invest your dough. Apart from that, for tonight, it's very simple. Over to you. Let me know what you'd like me to look at in terms of charts. I'm a technical analyst. Don't ask me about the fundamentals, because I don't care about the fundamentals, to be honest. But whatever you give me, a ticker code, please. All caps, because sometimes capital I's look like L's. The type of setup, is it a continuation, turnaround, or aggressive setup? That's what those acronyms stand for. And if you've been listening to me for any length of time, you should know what those are, and you should be able to tell me what they are before when you ask a question. And are we looking to add risk, maintain risk, or subtract risk? Probably a few R's tonight, I'm guessing. What key levels are you watching? Let me know what's going on in your mind. Let us head over to the AMI broker screen, and we'll kick off with our portfolio management model. As we know, we have this overriding theory of a portfolio risk bucket. Bucket can be filled depending on how much risk we see fit, and that'll be determined largely by our trends: long-term trend, dark green; short-term trend, light green. It is light green at this point in time. It's been sort of wavering, as you can see, with, I think, the short-term trend ribbon, whilst it's not perfect, I think the long-term trend ribbon, we all would agree, the long-term trend ribbon does a better job, but the short-term trend ribbon is still pretty damn good, and we don't like to be beneath it. We don't like it to be amber. We don't like it to be hitting down. We certainly don't like it to be pink, but I think it's doing a decent job of supporting the price, which is silly, of course, because it's just a trend ribbon. It doesn't actually do anything. It's just a coincidence the price tends to bounce off it. The long-term trend ribbon, that's unequivocal. That's still up, and we're pretty happy with the way that's going. And it's really, the designation here is short-term uptrend, long-term uptrend. So probably demand-side control. But we could move to some finer details here by looking at our price action. That's our peaks and troughs. And ideally, we have rising peaks. It's always, it wouldn't be live market analysis if that first line wasn't a dashed line. And I don't know why it does, it just does. And we'll go back here and we'll draw some of these in. We've got one in there. High highs, high lows for the uptrend segments, lower highs, lower lows for the downtrend segments. And this is where we are. And that's the low so far. We don't know where it's going to end. We've got an inside candle on Friday, meaning that the entire range of Friday's candle is inside Thursday's candle. So the prevailing peaks and troughs situation is, falling peaks to here, then we've got a rising peak, and technically still falling troughs, because we don't know where this next one's going to be. So let's call it rising peaks, falling troughs. It's a little bit all over the place, and that's the message. The message is it's not clear-cut, great. Price action, demand-side controlled, strong demand-side controlled price action, because that would look like that. Okay. Rather, what we're seeing is really a vibration, isn't it? Within a range defined by the all-time high. The Nasdaq has never been higher than that, ladies and gentlemen, at 24020. And this little swing low here at 21,898. And you could almost just go away, couldn't you? You could just, come back when the Nasdaq trades on either side, closes on either side of those two prices, and you probably wouldn't miss a whole lot apart from choppity chop in between. A little bit closer to the top of the range, I think that's constructive. If we look past some of these vibrations, we can say that that trough there, which is 22,916, is higher than 22,692, is higher than 21,898. It's a general progression higher, general pervasive demand in the system buying the dips. But we are undoubtedly experiencing some latent supply. And I think it's unfortunately a bit too motivated at this point in time. But is it coincidence that every time we get in there, some fundamental thing happens, whether it's Trump versus Greenland versus Europe, or the wash. I'll have this show. It's my first one back. The wash appointment. I've got Marsh. I've been watching my beloved Scorchers go around and win another title, so I've got Marsh on the mind. Perry's not happy with that. I don't know why. They are the best team in the history of the competition, Perry, so we should be okay with that. Anyway, I better keep moving because I'm boring my socks off. And let's just say we're at two-thirds risk position. I mentioned today, look, I don't think we're going to add much more risk. We don't know what's going to happen tonight. Futures are down a couple hundred points. We look at today's market, but we've got a lot of resources stocks. We've got a lot of gold stocks. They're not going to have a big impact over there, but there's a bit of risk off going. Global funds are going, do we really need to be fully invested? Could we be 95%? Could we be 10%? And that's just, at the margins, it makes a difference. I would love nothing more to see a big white candle, and the Nasdaq could produce it. We know it can, closing above 2402, and we're off to the races, and then everything will fade into the background. But we must be attentive for the signs that supply, which is clearly there, may have more of an impact when that marginal dollar is just on the back burner. Talking about marginal dollars on the back burners, I mean, this is a market that absolutely relies on marginal global investment for us to have a theme that the big fund managers kind of into at any point in time for it to have a good run. It helped when CBA was going gangbusters, and since it hasn't been, you can see the index has been struggling. A general improvement through here. I got a little excited. I started talking about the golden Le Creuset. There's no golden Le Creuset. We're back to the old tin pot, unfortunately, as we've seen. Resources was the only thing going for us, and now it's not. So, what's going to happen? What did I say today? Rather than maintain sort of that two-thirds risk position, which is still very conservative because it's 33% cash, just letting things roll off if they have to, not adding any new risk. And there's not a lot to add. I'll show you in a second, and just very gradually moving to half R as it goes. And you can see I've actually officially renamed it the old tin pot over there. Let us do the whip around the ground. So that is officially two-thirds still in the Nasdaq, not adding risk, but we haven't changed the limit. And back to half R here, just out of frustration, but very slow meander towards it. Let's have a look at the Russell 2000 because that's still intact. It did make a new high. Interestingly, the Nasdaq didn't, and that did. So that's good. That's a good sign. We'd like to see that as much as we don't like to see the recent pullback, but it is holding the short-term uptrend ribbon. So fairly benign there. We're looking for red flags. You know the drill. Is there anything to push us off either of those risk positions or push us into a greater risk position? S&P 500 looks very much intact. It's less of a risk-on market, so interesting to see more of a pullback in those more risk-on markets and less here. And I bet you if we go to the Dow Jones Industrial Average, I was going to say we see even less. It's actually not the case. Red flags there? No, I don't think so. What about over in Europe? They have started to go very flat, haven't they? They're on the CAC, no interest, but no red flag. On the DAX, ditto. Euro Stocks 50 actually looks half decent, to be fair. So there should be an overlap between the two, but not as much. And probably because a few of the bigger stocks coming from the FTSE, which, holy moly, ladies and gentlemen, looks absolutely incredible. And don't they have some mining stocks like we do? I guess less of the gold exposure. They don't have those really big gold stocks. Not that our gold stocks are a huge influence, but we've got lots of them, right? So that is never thought, look, we beat them in the Ashes, but they're beating us in the financial market stakes. And hola, look at that, Spain. So it's not all that bad. And maybe we need to start looking at UK and Spanish stocks. If you've got them, send them through, because that's what we should be doing. We should be looking at where the money, the big money is going, and we should be following that money. We're trend followers, right? The Hang Seng is fine. No red flag. Nikkei, not a great candle today, is it? I think there's an MOTN that there's another black one coming, but ultimately still very much intact short term and long term. Should not jump at shadows there. Nifty 50's got some issues, but not a red flag. That's almost a red flag. I don't like the look of that. Decent candle there. We'll keep an eye on that, and that's also not ideal either on the Chinese markets. We're going very, very well. Ironically, until I think the China trade deal, I think, stopped them. And the discretionary sector there in Australia, one of the lagging sectors, serial underperformance, still looks that way. Energy, reversal today. No comment, still looks okay. Financials, neither here nor there. We've been calling that the swing sector, haven't we, in the evening wraps of the market index, and you can see it's living up to its name. Gold, disappointing. We'll get to gold and silver. And in tonight's wrap, I called silver's move like an intergenerational reversal or something along those lines. Some issues there. Blend that candle together. It's starting to look a little bit like a species-ending event. You know, we've seen moves like this before. Best case scenario, what's that? 2.5 months? Best case. So it's not going to be, we're straight back up making new highs. There's some damage done there. We'll talk about the psychology of that in a second. Healthcare sector still looks pretty terrible, and I saw CSL pop up today in my list of potential shorts. Technology, I think, to be fair, I think I've nailed that one, with the exception of 360, which is just absolutely excruciatingly annoying, but did come down. So if you didn't go a full exit there, you're probably still back in the profit on that one. And material sector, getting hit today, but off lows. I think that's important compared to, say, the gold sector, obviously. But the gold sector feeds into this. It's part of it. It's a sub-sector of that. Property looking quite shaky, actually, as are some of the bond market proxies, staples there. Telecommunications, all fitting into that category. Actually, utilities, haven't seen that chart for a while, bucking the trend. Red flags? No, I don't think so. Let's head over to the base metals complex, and we'll go line chart, and you can see that there was this, this arguably this speculative fervour around metals, precious metals, and it was driving gains. It was becoming sort of increasingly frothy, but these are all words said with hindsight, because there's no way I could have or would have picked the move that's occurred, because many of the charts were looking perfect before that, and that is part and parcel of being a trend follower. But you do feel these things, and we probably all felt these things, but we're not going to try and be a smarty pants here and pick the top. Is that the top for aluminium? Well, I don't think so. I think the damage is fairly limited, and arguably these things are going to move on a little bit more of their own accord than that sort of silver mania, which is what you'd call it. Copper actually is a very, very mild pullback here. I think that's very strong. Iron ore is flat. Nickel actually is, I only saw this on Wednesday when I did the other webinar, and I had not seen this move in nickel. The last time we checked it out was was down here. So that is pretty impressive, and it's worth zooming out on that. And it's looking a bit more like a blip on that zoomed out chart. But look, with a confirmation that sees it bottom out around 17,000 or more, and to move back above those highs, it would actually start to look very interesting indeed. Lead is going nowhere. Tin, a minor pullback, and zinc pulling back. So look, they're not red flags. I don't think they're too terrible at all. Something that is starting to qualify as terrible is this one here, lithium carbonate. And look, I'm so proud of us all, because I know we would have looked at that candle and known exactly how to deal with it. And even on that candle, known that it is far from an emphatic recouping of control from the demand side, and then that is where we say, okay, there's some real problems here, even here, but certainly there. I mean, we know how these things work out. I think the only thing that was the mystery, and it's a mystery in a few of the charts, was the lack of lack of volume on this one, but we do have Chinese New Year holidays potentially having an impact there. But for all intents and purposes, that looks a little bit like a done dinner, doesn't it? It's gonna have to do some real work to come back from that, because we're now beneath that short-term trend ribbon. We took out 142.100, and just the severity, you don't get falls like that unless the market is pretty convinced about that prices are not sustainable, the prices should be lower, that there's plenty of time to buy. When, up here is about, again, it's that speculative fervor, it's FOMO, it's hot money rolling in, it's narratives being re-established by the faithful, where they reconvince themselves of how correct they are. And in reality, the real market that is not driven by narratives, but supply and demand available, figuratively speaking, at the coalface, in this case, at the face of those massive lepidolite mines in China that are now about to be switched back on. There's just no need for prices to be that high. But I digress. Something that looks interesting to me is this one here. I managed to get the backward-looking data set going back to 2008 on neodymium, praseodynium, the other way around if you prefer. But yeah, this is a nice-looking chart here, so we'll keep an eye on this one as well. But that's a really decent trend. I know local rare earth stocks aren't looking anywhere near that good, but there's been some fundamental news in that space. But underlying, I think that's a really nice trend. So some of the stuff that I've been looking at over the break. Let's head over to the, hopefully this works. There we go. What's this thing called again? Trading View screen. And we'll very quickly finish this whip around the grounds by looking at the big one. And, there's been few people, I posted on this candle on X, and I said, oh, geez, that's quite a candle. And I didn't make a statement of, geez, I picked it. I certainly didn't. I just said, that's quite a candle, full stop as it is. And then there's always one dickhead out there that wants to say, well, did you pick that one, Carl? I said to the particular dickhead in question, I said, I didn't claim to have picked it. And then I actually had somebody from the Wednesday webinar write me an email saying, hey, Carl, you really nailed your call on silver on Wednesday. And I thought, I don't remember actually making a call on silver on Wednesday. And so I looked at the tape, and I didn't, not saying I made a call, but I was talking about how we were looking at elevated volatility and substantially elevated volume here and here. But this candle was as frustrating because it wasn't enough, was it? And it went up after that. It wasn't enough for us to have a signal. Even if you blend them, it's a concern, but it's not like a smoking gun. I mean, that's a smoking gun. And then we went higher, and then it just wasn't there. And if it's not there, it's not there. You can't call it. But there were some. At least we had some signs here in volume and volatility. And what we were lacking was that smoking gun in the price section. We never got it. It just didn't happen. It doesn't happen like that all the time. Like that lithium one, which was really nice, but it didn't have volume either. They're not always perfect. And even when we look at gold, I mean, this candle here is hardly, within the context of everything else, that smoking gun. It's not great. It's telling you this great indecision has arrived with this massive volume. Guess what's also arrived is the supply. Supply's arrived. Up to this, there's still some supply here, but this is good supply. There's some volume there, but this is good volume. This is clearing out supply volume. We know that, right? We know how to read the price action with this volume, but this is kind of, well, we've had demand just taking everything out. Now supply's here because the candle's telling us that, we're all the way down there, but then demand still came in. Like, what are you going to do? That's the past. Where do I think it's going in the future? Who cares where I think it's going? It's going to go where it's going to go. It doesn't matter what I think. But in my experience, this is a tough one to come back from. A bit like, well, actually not like the lithium. This is way worse than the lithium. If we go here and look at the data window, we're going to see that 31.37%. That's a bit of a doozy. And if we went, for example, this is not that easy to do, but I will try. Just to give you some historical context, and we won't have candles all the way back here because we've got sort of PM fixes, but we can see, it's not a similar move, is it? Because 31% a day, but we just didn't have the capability, I think, to move that with limit move controls. If we go to the weekly chart, it might make a little bit more sense in the candles. I don't think there's any other way to do this, but to do it that way. And we'll go back to 1981, I think it is. But you can see this silver run-up, that silver run-up and our silver, they're the same thing. And they're kind of, it's just silver. They're going to end in the same way. And then there was one, there's a few of them. I wasn't trading then, by the way. But I do remember this one here was a bit of a doozy. These are weekly charts, so this was an exponential move. And then this one here, right? And that's probably where we are. So my point is, in fact, look at that candle. I know that this is a weekly candle, but let's go to the daily chart and compare. And we all know here that the candles are candles, right? So there's that candle and what it means. What does it mean? Why? Why am I saying, well, this is a generational move, that's it, it's cooked? Look, I think we can never talk in certainties because we're trend followers and anything could happen, the future's unknown, but this creates so much latent supply. At every point, there's a trader that is stuck long, wishing they're not long now. And they're just praying for any bounce so that they can get out. So the other thing is this stupid FOMO buying is what, half as much? A third as much? 10% as much? Like, you tell me. That stupid FOMO buying. Most of them are liquidated anyway. Like, they actually don't have any money left to FOMO in. They're going to have to go, wait a few more paychecks before they can throw their last, $300 at it in their crappy little account. But it's changed. Right here, we're in price discovery mode, right? Anything's possible. Silver $1,000 is possible. Silver $2,000 is possible. Silver $20,000. Silver replacing the US dollar as the global default currency is possible. Here, about $120 is possible, right? The whole psychology shifts. The bigger the candle, the more likely that is to perpetuate. So for me, that's pretty much done. Where I left you last year, I think it was in the, was it in the 50s or 60s? And I left you with nothing but a plus R on that one. I'd be neutral on this one, ZRP for me. Gold, not as bad, clearly. I mean, what are we talking about here? 11%. That's almost, as Homer Simpson said about that sub that he had. Remember the sub? A couple more feet and I can fit it in the fridge. That's one you could almost fit in the fridge, to be fair. That's not it's not good. The silver one is a species ending about. This one just might be reducing the population substantially before it recovers. But it does. I mean, again, it's stupid lines around the block in Martin Place. Stupidity back to, okay, there's a cap now, there's a ceiling, there's a level that could just pick us back a little. I better check your comments, make sure you're still awake. No, everybody's not panicking yet. That's good. That's not what I wanted to do. Let's go here. And what are we going to do? Uranium was moving very, very well. Hasn't pulled back as much as many of the other commodities, which I think is very impressive. Okay, so that's a good sign. And coking coal has had a good move and still looks very strong. Thermal coal is starting to tick up, so that's interesting too. So coal producers may have their day. Brent crude, ranges within ranges. It's broken out of one range, but it's still within the other range. So it always reminds me of that Leonardo DiCaprio movie, which bored me rotten for about 3 hours. Ranges within ranges within ranges within ranges. You're not sure which one you're in. And that's it. That's about it. That's all I'm going to show you before we get to your requests. I don't think there's going to be many tonight. How many people are here? And I'm sure it'll build back up as we go along. Let us head back to Amy Broker. If you have any requests on any commodities or any historical context you'd like, let me know. Let's head over here and go back to our candlestick charts, and we're going to go click on that one and go to your request. Hello again, Vart, Happy New Year to you as well. Happy New Year, says Adonis. Happy New Year, Adonis. Hello, Cruz, says Roscoe. Hello, Roscoe. David says, hi, Carl. Great to have you back during such volatile times. It's always volatile times, isn't it, David? That's all right. We'll manage our risk, follow the trend, accept, analyse, and act. Repumps and Happy New Year. I had a wonderful break. Happy New Year, Perry. Thanks, Perry, for coming back also. Adonis, welcome back. We're going to do Adonis's USA stocks at the end, of course. And getting to the bottom, CXL is the first Aussie one we've got from Vart CXL. Which, tough one. I think over here, we can all see, or we should be able to see, maybe even as early as there. I can't remember where I put it in. I don't think it was that one. I might have just said on that day, look, let me just have a little bit more. And then we went this, and then we went this. I wonder if I put on that day. Certainly I put on that day, there's no doubt about it. That's the little bit more I wanted. Because what I didn't have at that stage, let me just double check, but I don't think I had it, was no, that's an outside candle, it doesn't count. I just didn't have high peaks and high troughs. And, I just wanted that dink. And I actually got it here, a little intraday dink, didn't I? And I know that's not officially a trough, but you also know what I was waiting for. The demand side push, the shallowness of the pullback, and then the confirmation of the move. And this was, I felt a close enough close to that point of supply there, and everything else is in place for our turnaround setup. Obviously, the long-term trend ribbon has turned its transition from pink to amber. It's compressing. It has gone from pushing down the price, acting as a zone of dynamic supply. And we can see here we've done plenty of analysis on this to a zone potentially, we hope, of dynamic demand. And now I think that is the final flourish. So that's that would be, if we number these in terms of candles, of adding risk, 2, 3. Not that one, don't like the shadows, not that one, probably just holding back on the shadow. No. Are these reduce risk candles in here? None of these particularly. That one's starting to get concerning. But even then, like, where's the last peak? Where's the last trough? It's nowhere. We're above the short-term trend ribbon. Let it go. Let it be. All good here. That would be 4 for adding risk. Not here, upper shadow. No. Maybe, look, I could pay 5 on that one for adding risk. And certainly under pressure on this position, and on this position under pressure, and making money on those. Are these minus R candles? Not really, but I think we have to now set an absolute floor on this trade, being, I think, under those 2 tweezer bottoms. Certainly under here, but the tweezer bottoms in the short-term uptrend ribbon, I think, is important. And we've seen some elevated volume through here to suggest that the demand is starting to come in and take that. If we get beneath this level, it tells me that the demand that is fighting for this one has been consumed by the supply side. So the cash that was wanting to get in and buy the dip, that cash has shares. And if that cash has shares, when you think about it, if you've got shares, you're not demand anymore, you're supply. And if the price is down here, you're at a loss. Okay. Also, there's the requisite supply to fill them. That wouldn't be a good thing either. So I think we're okay. Today's candle is strong. Is it an ad-risk candle? No way. There's just not enough evidence in what's going on here. It's still held up. It's just, the rest of the market's not great, and other critical mineral stocks haven't been great. So no surprise that something that unfortunately was looking good here and here, everything else has got belted as well. So I can go equals R on this on the basis of that last candle, or the last 2 candles holding the short-term trend ribbon, but that would very quickly swing to minus R if we get beneath there. Let's have a look up. Obviously, the next zone of supply is going to be between here and here, so taking that peak, and then extending it over, and that's where we want to be highly attentive of the candles that we might see in there, and the price section as well. Obviously, we don't want to see something like that. We don't want to see the big black candles in there with the upward pointing shadows either. Thank you for that one, Avart. Let's head over to your second one, which is FLT, which was also a turnaround setup, funnily enough, but actually looks quite different from that last one. I can't remember where I put this in. I want to say here, and somebody I'm sure will correct me if I'm wrong, and then the next one I might have had, in fact I might have had there. That looks good, and then definitely there and definitely there. I think it was ran as a feature chart the other day. So those are all adding risk. I don't think there's anything really here that's taking risk off the table. It's still all pretty benign, I think. So all good there. Where could we run into some issues? Look, certainly up here, what's behind that? So if we go from there to there, so that trough low, so the old point of supply, right? There were people buying in here, demanding, thinking they had a bargain. Well, how do they feel down here? Right? They don't feel so good. They're really hoping that it goes back up to their break even so they can supply, and lo and behold, that's pretty much what happened. So that's the zone, and this is just a supply zone anyway. So if we extend that across, we get this, and we're okay. There's a bit of room here, a bit of room to move. So I'm assuming, you're probably already on this one. And today's candle is not ideal, but not a lot was ideal today. The fact, it wasn't down that much, and we're down 100 points or something. So a little bit of volume today and yesterday, the supply removal, but as much as they tried to remove supply today, it looks like maybe demand just took a back seat, thought twice. Bit of supply out there today. We've got a upward pointing shadow, but small within the context of the broader trend. So I'm not worried about it. That means I'm equals R at this point in time. I can't be plus R on the basis that that candle isn't ideal, but the next demand side candle, I'd happily have another go. Next demand side candle equals plus R on that one. Happy with the risk I've got. As in terms of, actually, now that I've said next demand side candle plus R, we still would want to just double check that we can make at least 1-to-1 on wherever that would be. And let's say hypothetically the entry occurred somewhere around here, close to that last high. Can we make 1-to-1 into that supply zone? I think we should be able to our first minus R area. Let's go to David, who's got 4DX, which has been all over the show. We looked at this in December because I think we were adding risk in December, so that's good. That makes me feel good because I'm guessing a few people then had a very happy Christmas on this one. Where did you get out? Where did you take risk off the table, or have you not gotten out? Are you still in? I wonder. David, what are you doing? Plenty of places to add risk, and no doubt the last couple get tagged. And I think you've got to think about adding risk up to a certain limit. And you might have, you've heard me say 4R, which would be lots of plus 1/3, but there is a limit where you have to stop for a couple of reasons. You don't want that position to become too big in relation to your other positions, and you want something in there, a little bit of a circuit breaker, so you're not adding so far along in the trend as well. But not to say that this isn't still a buy. That's still a buy for me, but it didn't turn out. That candle there suggests we've got problems, and that candle there confirms it. And then certainly by that candle there, I think we're back to ZRP. We're not far off that, so you haven't missed much, you haven't let too much go if you haven't acted upon it yet. Hypothetically speaking, you can do whatever you want to do, but for me, I cannot see any reason at all to have any risk on this position based upon my model. I don't know where it's going to go tomorrow. It may head back up, and I may regret saying that. Actually, I probably won't regret saying that. I'll just say, well, I made a call, and that didn't turn out based upon the probabilities that I'd associate with such a chart. For me, more often than not, this will continue to go down. It might well do something like this, hit that, and who knows? And we'll play the next leg up when that occurs, much like we did here. So ZRP for me, I can't see any other way. And actually, if you start to blend that candle, it starts to look pretty disturbing, because I'm guessing down here, and I'm still getting back in the swing of things and trying to remember everything that I need to do. But we can see, we were up there on the volatility, and we were running at 4 or 5 sessions in a row, double the average volume. So when we do see opposing large price action signals. Under those circumstances, they are often, not always, but often associated with major swing highs. Let us go to Robert, who's got PC2, which I still think looks very good. And that's all the chart we have, by the way. There is no long-term trend, but I'm happy to trade it. I don't need the long-term trend. I just need to feel that the demand side's in control, and I certainly feel that here. So this one, it's a good segue into today's feature list for tomorrow. Today's feature list for tomorrow. Today's candles that I felt deserved a feature chart for tomorrow's edition of ChartWatch. EDE, I have no idea what this one does. I've never seen it prior to today. And I'm guessing that's because my maximum turnover filter over here must have been 0, which means it just didn't have the minimum requisite turnover per day. But you all know my model, and it's not just saying, hey, I would have got it, but I would have got it a bit earlier than that. And then turnover filter 1 here, which I actually did see it on that day, but I thought just a little bit of upper shadow. Obviously not that day. Obviously not that day. Today's the day that it closed at the high, so better late than never on that one, but I still need to run it. Lycopodium's been in many times. We talked about coal, didn't we, at the start of today's presentation? So New Hope joins Whitehaven as a recent feature. PC2, very strong on that one. Shape is just a stairway to heaven. And TVN dodged the bullet today, so very good on those. In terms of feature downtrends, we should expect these to look the exact opposite of those. Aristocrat, Leisure, Terra Limited, I don't know if you can short that one, but certainly you can short ALL, AUB, I should think would be short sellable. CAR, definitely short sellable. FND should be. GDG should be. MYX should be. WTC certainly will be. And Block also rounding out the list there. I mentioned 360 before, and this is a good reminder because we're about to kick off on earnings season, and that means the potential hand grenades are about to be thrown at us, and we can have the best trend, but then that fundamental news breaks and the market thinks differently about our trends. So yeah, look, on that day, on that candle, if you checked it towards the end of the day, taking some risk off the table, on that day there you might have just taken some more off just to get safe, and then on this day here you probably would have just said, well, let's just actually see how this goes. But I think that's where you are right now. But it just reminds us that we need to be on our toes. It doesn't matter how strong the trend is. When news breaks, where we could have an adverse impact. So some people, I can't tell you what to do, but some people do like to just take a little bit of profit, even if it's just a third or a fifth or whatever it is, but just taking some profits before that news comes out, just dull the blow if there is a counter trend move. In my experience, more often than not, the price tends to break with the trend. You've seen me post them on Twitter so many times. For example, Treasury and Wine Estates, if only there was a way we could have told, but there are some, in that spectrum of more often than not, there has to be some that don't go the right way. So I'm going to publish a earnings season calendar tomorrow. Hopefully I can get it done on time and get it out before close of business tomorrow on Market Index. So stay tuned from that. That'll keep you abreast of when these news events are likely to break. Let's go to TGN, which actually is one that has been coming up. Not that one, that's not TGN. Here we go. Tungsten Mining, of course, yeah, that reminds me now. So that was the last plus R, pretty sure there was one there. I don't know if I put it on there because of the shadow. And I think that's it. I think the last ones were back in here. But still looks fine. It's a tough time now for any of these little stocks that must rely on the speculative dollar to continue to push them on, because a lot of those speculative dollars, let's face it, have just disappeared. They don't exist anymore. They've evaporated into the ether. They've been unexisted. Yep, they've been unmade. So that leaves less of those speculative dollars that were being reinvested into the next thing and the next thing and the next thing. So everything, even the good ones now, will calm down, unfortunately, because I know we got almost used to it, didn't we, for most of 2025? The most spectacular moves in some of these stocks. that was easy. It's not going to be as easy, I think, for the next few months at least, while we digest this unappearing unmaking of capital. But that still looks like, I can only see what I can see. I can't tell you what's going to happen next. It could be the big black candle next that kills the trend. I don't know, like that one. But hopefully you'll agree with me that right now it's still an equals R. We should be looking at that shadow low there. I don't want to see it close beneath there. Certainly don't want to see it close beneath there. We know the types of candles that we would be compelled to take some action on. So equals R in the meantime. And TM1, Terra Metals, I'm going to go ditto on that. If anything, this might be one where I think today's candle suggests not running at a full risk position, whatever that means. I think you know what it means. Like, that just says it's been valiant, you know, full credit for withstanding the wipeout of the last couple of days. Not that it's been completely unscathed, but, well, look at that. It's close there to there. It's not bad. But I just think with that, and then today's upward pointing shadow, we've got a bit of an issue. You can play it by ear and set that as your level. Like, you know, today, a bit of demand came in. Obviously, I don't know the order of events, whether it was coming in late, trying to recoup it back. That's a good sign, rather than it came in early, went back up here, and then got hit towards the end. I don't know. But I still think we don't want to close beneath there. So it might be a case of not running at FRP if it closes beneath there, or not running at FRP on the open tomorrow. But that's, for me, let me just say, not FRP. And I'm only talking about a minor move, one of our minor moves off the table. That's all I'm talking about. And potentially escalating depending on candles. So it looks like a couple that have largely dodged the bullet there. Well, three that have largely dodged the bullet, Robert, so that's good to hear. Do I have a chart for tungsten? Different, Robert, coincidentally, asking about tungsten. It's been on tear for months. Not that I can think of off the top of my head, but, you know, let's go to tungsten and I'll show you where I'm going. Let's see if we can find it here. Tungsten. And I doubt there's got to be futures. American Hope. Let's go futures. No futures. Let's try tungsten. No tungsten, unfortunately. Yeah, well, let's go all. And I'm just not aware of it. And I'm sure there are, but it might be on the Shanghai Metals market. And I'd have to do a bit of a look around, and, you know, I don't think we're going to do that today. But if you can put a link to where I can find one, then that would save us some time. And I'm guessing it is probably going to be a line chart as well. So no. And I'm not going to go do a Google search. I'm going to say no and say that send me a link, and then we'll both know. And even better, if you can get me data, then I can make a chart for it. From David. Carl, you mentioned uranium was doing okay. It is doing okay. I think it's doing more than okay. Let's go back to here and let's have a quick look at some of those uranium stocks. We'll start with Boss Energy, which, gosh, that's pathetic. Far out. I mean, just... It wouldn't be the first stock that has been absolutely killed. Fledgling rally, it's been killed by that long-term downtrend ribbon. But geez, that is pathetic, isn't it? Boss Energy. Look, I would still be an equals R, I think, rather than a minus R at this stage. I'm not an add R, plus R, of course. PDN was much better, but getting caught up today with some of that. Again, when the hot money from everywhere else gets unmade, evaporated, disappeared, then it takes hot money out of other places as well. And uranium was starting to get very hot too, because it was getting just as many headlines. I know, because I was creating them on Market Index. This is still intact, combined. No, I'm happy to run the gauntlet a little bit and go equals R on this one. but monitoring for a minus R, but no, happy on that one. So still FRP, could be famous last words. DYL, that one looks a little bit more severe, and there's a bit more volume and volatility about it. I just think as a precautionary measure here, and it's just one notch off the table. We're not wholesale exiting. Bannerman, that one is in that boat, definitely. I mean, this one's more clearer, I think, and yeah, certainly volume and volatility are matching up on that one as well. So that, you know, if we go back to Paladin to compare and contrast, it looks far more benign, surely. What else have we got? We could go to some of the more obscure ones, but I don't think you want to waste your time with these anyway, to be honest. I'm just trying to, I'm pausing because I'm trying to think of some others. Nexgen, which is the one that was requested of me. Yeah, three, and of course it's going to be gappy because it's trading based upon a North American close, whether that be the Canada one or the ADR in America. But let's say that's a decent little reversal there. You don't get reversals like that unless there's motivated supply in the system. And on that day there's actually some size associated with that supply, and it is also consistent. So it's not just the size of the supply, it's the size of the demand that was panic buying in. Look at the gap. I mean, this is just absolute FOMO in here. It's like, just give me every share you've got. And the supply side said, yep, okay, there you go. And the demand's going, oh, I don't have, I'm in. Like I said, if you were demand and you bought shares, now you're supply. And now that FOMO is now fear of losing money, isn't it? FOLO, or FOLM. So yeah, I think, long story short, I think we can go a notch off there as well. But we are respecting still with the risk. Still on the table, those longer term trends. If there are other big uranium stocks, likely I can't think of them. Let's, when we get to the US ones, we'll look at the Cameco. US stocks, good. That's nice queue. Let's go to US stocks now. I've got pairing. We'll work our way up the list. Finishing with Adonis, as we usually do. I need to go here and back to candles, zoom normal, and type in CC. Should we go CCO? We'll go to Canada. That's the main chart. Well, there you go. That's not so bad, is it? Why is our local uranium stocks are crumbling? I guess this is the one with all the uranium, isn't it? So it probably doesn't care as much. But that's intact. I don't think I'm even at minus R on that one, to be fair. Out of curiosity, NXE, which is the Nexgen Energy. So it must be currency related as well. So anyway, I have to go on the charts that I did see and stick with the analysis that I have done. Let's go to Kerry's FDX. Oh, that looks great. FedEx, we know what they do. Let's go to the weekly chart and see if there's anything out the corner of our eye, and there isn't. And we could go further back, I guess, if we wanted to, but I just don't like to do that, because the further back you go, the less relevant it becomes. And anyway, there's nothing there. This is all-time highs. We've seen a bunch of charts today that are far from, and some that are close to, but just can't do it, just can't bottle it. And yet this is absolute confidence when you think about it. So there's a lot of money out there right now, a lot of nervous money too, but they're not nervous about this one, and shareholders clearly don't want to part with it, because they're needing to be enticed by higher and higher prices to get that supply out. So for me, there's absolutely no doubt about it. This is a plus R, and a very strong plus R for me. There's no need to wait for the next demand side candle, because you got it. So that's FRP. And plus R, very clearly, click save. Thank you for that one, Perry. Let's go to KO, which is Coca-Cola. And the classic defensive stock, isn't it? I know one of Warren Buffett's favourites out here, an all-time high as far as we're concerned. And I just go ditto. FedEx, Coca-Cola, you know, really, I guess, defensive names. And I can't see anything wrong with this one. You could argue, geez, there's a lot of black candles there, Carl, and there is, which I think makes this rally so much more convincing. Like, the funds that were causing this indecision, that were feeding and distributing, I feel that they've been dealt with, and there's it's a new paradigm. So very happy with this one. Let's go plus R and FRP, and we're going to go save on that one. Everything checks out here. Supply removal, it's all very good. Let's go for GILD. Oops, undo that, escape that. There we go. Gilead Sciences, another strong move. Just perfection. Shallow pullback, and then we go. And I don't think we're going to see anything out here. We're not. I started today's conversation about being very conservative on risk in the US, and yet we are seeing some of the absolute best charts here. So today, if you're looking for risk, here it is. And ACMR is the final one. ACM Research. It's the last two Nasdaq stocks. And, in terms of, this is, against the Nasdaq. So you can see the relative strength of this one and of the last one coming through there. ACMR. Brilliant. Can't fault it. If I was to have a 4-stock portfolio right now in the US, that would be FTX, KO, GILD, and ACMR. And look no further. Plus R, FRP. Click save. Supply removal. Touch and, it's that kiss it go on the short-term trend ribbon. Great trends. Looking great. Let's go to up the list here. I didn't see anything from you, David. Sorry, other Robert, about tungsten. So I'm gonna scroll off the bottom, which means I might not see it for a while. And we're back to Adonis for USA stocks, CMRE, Costamare, which looks very, very good too. Up there with any of those other ones we've seen. Let's go to the weekly chart. Even better. I mean, that's a cracker. So happy about this one. A little bit of a pullback in a bad market, but then look how it closed. I mean, buy the dip, and there was some supply at the market, and then the demand said, yep, we'll take that. We'll have that one. That's good. So happy on that one. I don't know, it looks like it closed down in the day, but that's irrelevant. That's still very much a strong demand side showing. So yes for me, plus R or full risk position equals O if you prefer. Let's go to CVX, which is Chevron. We did see some of those, that crude oil contract starting to push up. We've seen some of those ETFs also moving up, and often when that occurs, it tends to feed on itself. When we saw those gold ETFs feed on themselves, will we see the same? And if they do, then Chevron is going to get the benefit of that. Let's go back to that is the weekly chart. So that's a clean shot there to all-time highs, which means that no objections from me on this one either. Very strong. I can't fault it. I mean, just a monster move, shallow, no pullback, and off we go again. Looks like earnings on Friday night. Just everything. It's perfect. 10 out of 10. Happy with that one. Plus R and FRP. If you've already got it, let's go to TGB, which Adonis says is a continuation play. Well, yes, but we're going to have to wait, I think, a little bit until this one shows us another, or moves back to demand side control. This is my concern here. Like, blend those together. Massive volatility, and not totally blow out of the water volume, as in like a huge amount of money just got stuck into the top, but there's enough, I think, to warrant some caution here. So for me, not only would I be just cooling my heels on this one and waiting for it, not just a strong demand side signal, because we've actually taken out this little trough here, so that's a problem. I need to see a little dink. I need to see at least a dink back up, a nice strong high candle close into, I'm going to say 850 and above before I would be adding risk. In the meantime, this is, I think, if I had it, I'd be taking some risk off the table. I don't think I'd be running at full risk position on this one. It doesn't mean I wouldn't still have some risk on it, but I must take some risk off the table on that one, and that's what Adonis is saying. And short for DHR, good. So I'm glad we've actually got somebody thinking about shorts. DHR, which is this one, DH Horton, isn't it? It's not that one clearly. Danaher would be an aggressive short, right? Because we've still got a green uptrend trend ribbon. So by definition, therefore it has to be aggressive, much like if we're buying when we've still got the long-term downtrend ribbon. We can do it, but we need to be at least halfway through the ribbon would be nice if we're at the ribbon, or if we're above the ribbon, having at least 1-to-1 reward to risk. So I don't think we have that, unless I've got the wrong one there, Adonis. This one and this one, definitely bearish. Yep. Still too early for me, because we're going to fight. We're going to fight those guys. We're going to fight. There's demand in there. Buy the dip in there. They might still be there. Hey, they might not be. But there's still, I still see this, and we know the long-term trend ribbon is still, we know it has a tendency to do that. So when we're going to fight it, we need to be far enough away from it so that when we get there, we've got 1-to-1, or for me, halfway through it, so we've got less to get through. You know what I mean? So I would love to. I don't have on my AMI broker the US data. I let that go a while ago. Just don't have the time anymore to pursue it. But I would love to do a scan and find you some other ones that kind of look a bit more like what I want to see. But I mean, if we have sort of more, I'd rather be sort of finding something right there. That's the one. And we talk about interaction with the long-term trend ribbon, like everybody was starting to feel and get drawn back into it, and then whooshka, there's some earnings there. It's not good. Everybody's caught on the long side, and that's the sort of picture. We've been going through this phase and then coming now into this phase. And that chart has to exist somewhere right now. It's got to be out there. We just got to find it. No, that candle there, right there. That's the one. Oh, look, I mean, before that, yeah, I mean, around here. I mean, absolutely, yeah. I mean, that's just as I was scrolling back. But I mean, that's kind of the picture perfect right there, isn't it? I mean, it's just adjusted the scale. Hopefully we can all see that. Hopefully that I've now tattooed that picture into your brain. That is the perfect turnaround setup for a short right there. But no, I was just showing that, and just as much as if we're going to have a crack at that long-term trend ribbon, I mean, you can see why we don't, unless we're really confident about it. And even then, even if you waited for that candle there, because we're more than halfway through, right? And at least it's gone amber. I mean, if you argue to say, Carl, I'm going to take an aggressive short on this one, I would have said, okay, go for it. All the power to you. That's very brave, but hey, at least you've waited that much. And then you would have gone, oh, Carl, I probably shouldn't have done that. I said, that's okay. But we can, and we don't do this enough, but because we in these sessions on Monday nights, we tend to try and find aggressive longs for some reason, but there will be aggressive shorts out there that you can trade if you've got enough time to find these sorts of setups. And that's not really it. I don't have one here, but let's go for something like I want to find one. I think this would be really interesting to see if we can find this today, because it will open up a whole new way of trading. And we kind of didn't here because it's just too sudden. Well, actually, what I'm talking about, okay. So, okay, this is it. This is exactly what I wanted. I was just getting confused with the long-term and short-term trend ribbons. There's the long-term trend ribbon. Okay, so Adonis, this is an aggressive short. This is like as aggressive as you can get, but Is it really? I mean, if we were, do we all agree, hey, if everybody throw your microphones on or give me a thumbs down, but if you disagree, like this is minus R every day of the week. Yeah, so if it's minus R for the long side, then if you can make the trade work, it could be a short trade. But what's the beauty of this is now you're shorting the whole silver dynamic. This is where the volatility is. And if you've got some long side exposure, now you're actually starting to pull in a hedge rather than trying to short General Electric, which might be in a downtrend, but has got nothing to do with where your long side exposure is. So you're going to the coalface here. This is how you get a hedge. You don't get a hedge from shorting something completely unrelated. You've got to short effectively the same thing. That's a hedge. And then why does this work where others might have failed? Because, if your stop loss is up here, right? And by stop loss, we mean buying back. And we know that we cannot remain short if we close above here. Like we can't. We absolutely need our head red to fight Pan American silver, because I tell you what, to get there, silver's trading at $120 an ounce again somehow, right? So 100%, we must be reducing our risk, if not all out of all of our risk by there. So if we're shorting it tonight here, right, can we make one-to-one into the long-term trend ribbon? That's what and actually in this case we can't. So it's such an extreme move. We're actually struggling to make one-to-one. But I think you get the idea of how you can find these aggressive shorts. So I'd rather try for an aggressive short here than for an aggressive short on that other one you had, which was DHR, which I think is you're going to find it's a tougher path, I think, to success, because we've got this here, we haven't even beaten the long-term trend ribbon yet, and it's like, and you go back, and the long-term trend ribbon's kind of a bit of a thing on this one anyway. We know it is most of the time. I mean, like seriously. How is this possible? I don't know how it's possible. I still don't get it, ladies and gentlemen of the jury. But it just is, and let's hope it stays that way, right? What we don't want is some big fund manager that's using this model to go, Carl and all his mates are using it, let's change it, So yeah, that's an interesting one. But they are valid under my model. Because if the corollary is valid, where we're trying to catch that turn up, why isn't it the opposite valid as well? But for me, it's just having time to manage it all, and that's my biggest challenge at the moment. And for me, with my trading, it's got in fits and starts. There are times where I go, look, I just can't give it the attention it needs, so I have to just dial it back. I'm going to focus on this other part of my life. At the moment, it's family and kids and things like that, and I know I'll be around when they don't need me anymore. They're off doing far more interesting things with far more interesting people than old dad, and I'll have plenty of time to get back to all of this stuff. And the good thing is, compared to when they were very little and just before they were born, I didn't have the benefit of AI, which I'm going to have next time I get back into it. So it is what it is. Let's go. There's one more that's popped up here from Perry, and then we'll dogs. Is that like an ETF? Dogness. Oh no, I thought it might be an ETF of really bad stocks. This one's tough to short because your upside is fairly limited now, and I get why you would short this one on the basis that it looks terrible. But I guess $1, if it goes to zero, then you're still going to make $1. But yes, I'm going to say that that is dogness by name, and that is clearly dogness by nature. You knew the pun was coming, but wow, what a stock. On that comical note, I think we'll leave it for there. I think we're okay on time. I'm going to try and pare them back to, if I can, an hour this year, ladies and gentlemen, because I know it's crazy late in your neck of the woods. Plus, I do get in trouble if I go over time. So let's keep Mrs. Capolingua happy in 2026 if we can. And we're always back next week, or catch me on Wednesday as well. So I better go to the old Warren Buffett picture. And what should I say, ladies and gentlemen, until next time, continue to find value in the markets. Bye-bye for now.